Hey, everybody. Welcome to June 16th, the Market Update Desk with Scott Riley, NMLS number 157524. And we got done with a really busy week and a lot of data and geopolitical things. We roll right into another week of big information uh, that could be market moving as we go forward. Now, obviously, since last week, we've had the conflict in the Middle East, which is affecting things. Let's also go over what's happening today and what the week looks like. It is definitely a very important week ahead. It's highlighted by the two-day meeting of the Fed, which kicks off actually tomorrow and ends Wednesday. Now, in this meeting, the Fed is going to be releasing their Statement of Economic Projections, or SEP. That's the dot plot everybody's so anxious to see. That's going to show the updated forecast that each member lists on there independently, on what they believe unemployment, inflation, GDP, and the future of rate cuts is going to show. So it's a very important data point that we need to watch. Additionally, Chairman Powell will do a Q&A session at around 12:30, and that's going to be really important because we know there's a 0% chance of a Fed cut, but the commentary and thoughts about tariffs, economy, geopolitical, inflation are going to be the market movers, which is what's going to come from this meeting. One of the things we're watching really close is oil prices. Now, they spiked to about $77 a barrel after the start of the Israel Iran conflict. WTI West Texas Intermediate crude has moved down to about $68 a barrel since then, pretty close to where it was before the beginning of the conflict. Helping things are reports that there's not going to be a shutdown in the Strait of Hormuz because China needs oil, and that the U.S. also does not want Israel to attack Kerrang, which is where most of the Iranian oil production comes from. So there's some global guardrails, it looks like, that are starting to come up to maybe constrain some things when it comes to oil movement through the Middle East, which has calmed the oil industry and oil prices, I should say. Now, the latest data from 150 economists in the U.S. was just released, showing that the median home forecast for home appreciation for 2025 is 3.4%. That equates to about $17,000 on a $500,000 home. Now, keep in mind, this is a national number. Here in West Michigan, definitely could be anywhere from slightly above that to well above that. That's why buying a home is so important, so you can start to have appreciation, that wave working for you versus against you. Um, Going back to oil, one of the things that we're watching for potential impact on inflation is because the last week's report on CPI and PPI specifically were lower, in part because of energy and oil prices had come down. If we see elevated oil and energy prices, that could put strain on inflation numbers. Instead of coming down, maybe stay a little higher to elevated. And that's one concern that we've got when we're watching going forward. It'll be interesting to see if Chairman Powell makes any comments specifically regarding oil energy in relationships to inflation and what that might cause. And when we talk about the Fed meeting, a lot of what that could revolve around is the unemployment number. Remember, they've got a dual mandate, price stability and maximum employment. The employment numbers are getting strained, as we've talked about, on the initial and jobless claims. So those are real interesting things that we'll see what the commentary is about. Now, the full week of data, today we've got a 20-year bond auction. Tuesday, we got retail sales, industrial production and capacity and utilization, National Association of Home Builders Housing Market Index. That's all on Tuesday. Wednesday, we get mortgage applications, initial jobless claims, housing starts, and the Fed meeting with the SEP. Wow, that's a big day. Thursday, the market's closed in independence of the Juneteenth holiday. Now, one other data point that came out today was the Empire State Manufacturing Index. It gives a it gives an overview of the strength of manufacturing, and that came in at a minus 16 versus expectations of minus 5.5. So lots going on this week. We're going to stay on top of it. Technically, mortgage-backed securities looks like they managed to break above their 50-day moving average this morning and are right up against the 100-day moving average. 10-year bond is flat at 4.4086. Likely going to be quiet today. Waiting on the big ones Tuesday and Thursday. Thanks so much for watching. Give us a like, share, comment if you could, please. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.